In this video, I'm going to be going over the timeline of a typical trade for me. This is basically the steps that I go through for each one of my trades, and I have a little thing written down below each one of these, so I'm going to go over these in a bit of detail. But first, let's just go over the simple time frame. So every trade, basically, I would say, regardless of if I plan for it way ahead of time or if I just get to the charts and look at the price action, analyze it, and decide that there's a trade I want to take in the short term, I'm still going to plan for it, even if I'm only planning like 5 minutes ahead. Every trade starts off with analysis and planning. So I do my analysis, I decide what trade ideas I'm looking for, and then I basically set alerts. Once those alerts go off, meaning once price gets to my area of interest, that is when I essentially, lock in. I start focusing and watching price. And I would say from the time that my alerts go off to, if I end up entering it, then, until I de-risk and take profit on that trade, I consider this my lock-in zone. I have to be focused during this period. I can't lose focus because, I've done that in the past. I've lost focus and I've either ended up missing a trade. I never went from, my alerts going off to actually getting the entry because I lost focus, or I entered it, but I wasn't able to manage it or, de-risk it correctly because, I lost focus. And maybe there was an opportunity and maybe there was a confirmation telling me that I should have TP'd and de-risked the trade, but I just didn't see it because I lost focus. So during this period, it's very important that I maintain focus. Once the alerts go off, if I decide that I'm going to enter, then I enter. Once I enter, my next goal is to manage the trade. It's to look to de-risk and TP on the trade, which means take profits. And then once I've already taken profits on the trade, I've already de-risked it, meaning I've locked in the profits that I've gained, and maybe I even moved my stop loss past my entry, so I will get stopped out for some additional gains if it starts to go against me. Basically, once I have it de-risked and TP'd, then my next goal is to try and maximize profits. So now let's go over these things in a bit more detail. First, I could spend hours talking about how I do analysis and how I plan trade ideas, but very simply, just to keep things brief and, just as a quick thing that I jotted up before I recorded this video, my goal is to come up with high probability ideas with good enough risk reward, high confidence, and at least being able to hit a TP1 and in being able to de-risk that trade, and that has potential to continue past my initial targets. For an ideal trade setup, I want to have all these things. I want to have good risk reward. I want to have confidence in being able to hit that TP1 and being able to move my stop loss at a reasonable time. And that, I think also has potential to continue past my initial targets. And another thing I could type in here is I then set alerts. Set alerts at my areas of interest. And then that leads us into our next step, which is alerts go off. Price gets to our areas of interest. Again, this is the lock-in period between these three steps. So the alerts go off. I want to make sure that I am staying focused on price. Determine what confirmations would be sufficient, and determine if risk reward makes sense to reasonable targets. So again, I probably already did that when I planned for the idea in the first place, but you have to see what price is doing when it gets to your areas. I mean, the confirmations could come a lot sooner than you expected. They could come a lot later than you expected. Maybe that ends up giving you worse risk reward than you intended. And maybe if the risk reward doesn't make sense, even if it's a decent idea, maybe you don't want to enter it yet. So if all things line up, if price gets to my area, if I see the confirmations I want, and if risk reward still makes sense, then I decide to enter. So, I basically just said that. Yeah, if confirmations are there, if risk reward is there, then I determine my position size based on my stop loss, and I enter. And from there, I determine my profit management strategy. So do I want to set limits at my targets, or do I want to watch price as it gets to my targets and then decide if I want to TP or if I'm going to shoot for higher? If you're targeting a range high, maybe you don't want to take profits on that range high immediately, because what if price breaks that small time frame range? As soon as it gets to it, it breaks it significantly, and then at that point that justifies targeting higher. Maybe you want to try and aim for the better risk reward. I don't always set limits exactly at my targets. I often will rather set alerts there. And then once price gets there, I'll decide if I want a TP or not. But there is definitely also a time and a place to set limit orders for TPs. I also do that often. It's really a case-by-case basis. So once I enter the trade, next is I have to manage the trade. And my goals are to de-risk and take profits. Again, a little reminder, even though I already entered the trade, even though I put in some work to get to this point, I still cannot lose focus while the trade is at risk, meaning I haven't moved my stop loss yet, or I haven't put it to like my entry. Maybe I moved it up slightly, but my trade is still at risk. Before I completely de-risk and before I hit my TP1, before I lock in like good enough profits for me to consider the trade done, I still have to stay locked in. I should set alerts if I walk away from the computer, if I go to do something, because oftentimes I don't want to stay at the computer staring at it for hours at a time. And I don't have to do that. I can set alerts. I can watch price and say, all right, if we start moving, against my trade a certain amount, if we start losing significant support, I'll set alerts at that support. I want to know what happens when we get there. And I'll also have alerts set at my targets. So I'll have, alerts set above and below price. So then I don't have to stare at it. It's like, all right, once we get to a significant area, I'll have an alert go off, and then I can start staring at the charts. I want to watch price and manage how I see fit. My goal should be to de-risk and lock in reasonable profits. For me, reasonable profits is at least what I risked on the trade. So, I typically risk 1% for a trade, so a reasonable profit for me would be a 1% gain on my first TP. And good enough risk reward usually means that I'm shooting for at least, I would say, a 3-to-1. There are rare occasions where, I'll say, all right, a 2-to-1 is good enough. Maybe it was a crappy trade to begin with, and maybe I'm seeing signs that I really should TP around this 2-to-1 point. Maybe I will. I'll close half the trade, lock in what I risked on it. But ideally, I can TP around a 3-to-1 or better. Once I lock in reasonable profits, once that is done, I can relax a bit and just set alerts at my next targets or decision points because there is no need to continue staring at the chart. You can kind of consider the lock-in period ended once you've already locked in some profits on the trade. Maybe you still want to stare at the chart. Maybe it's worth it. Maybe price is aggressively moving to your next target. So you're like, all right, I'll just stay here and, try and continue managing this and look for my next opportunities to TP. But, usually once I lock in a trade, I either do one of two things. I go do something else with my time, or I will maybe start planning other trade setups, maybe on different assets. My point is here that once I lock in and de-risk it, I can relax a bit on the trade. I don't need to be as attentive to it. And finally, I look to try and maximize my profits. Get that thing out of the way. I'll delete that now. So if price significantly breaks past my initial targets, then I can start shooting for further targets as long as they make sense. I still want to watch price for signs to take more profits or close out entirely. Again, I typically have alerts set at my decision points, so I don't need to stare at the charts. I can just wait for alerts to go off and then see how price acts at the important levels. I could go into more detail on each one of these things, but for right now, I just kind of wanted to get the basis of what a typical trade looks like from start to finish. And of course, not every trade gets from this point to this point. Sometimes I enter a trade and then take a loss, right? That's why risk management is important. And that's why having a strategy that I'm confident in is good, because I know that I'm going to take losses. But I also know that once I take a loss, I can just revert back to step one and repeat the process. And I know that that will give me a high probability of success with, pretty much all my trades. I don't need to stress about one trade when I know that I have a high probability strategy that will allow me to take trades often. All right, that's it for this video. Thank you everybody for watching. If you enjoyed, please consider leaving a like, leaving a comment, subscribing to the channel. It really helps to support my channel and I appreciate it. And I will see you all in the next video.